It was a big relief for Indian edible oil markets after world's largest producer of palm oil, Indonesia, clarified that the export ban announced late last week won't be applicable to crude palm oil. The ban will come into effect from April 28th, but it will only cover shipments of refined, bleached, deodorised or RBD palm oil. This, in a way, is also beneficial to the Indian local refining industry, as any move to curb import of refined oils boost domestic oilseeds crushing and refining industry. Almost 70% of the total annual palm oil imported into India, estimated to be around 8 to 8.5%, is in the crude form, while the rest is refined. The move marks a big and a welcome U-turn by the Indonesian government. India imports around 13 to 13.5 million tons of edible oils, of which around 8 to 8.5 million tons, that is around 63%, is palm oil. Of this 8 to 8.5 million tons of palm oil, almost 45% comes from Indonesia and the remaining from neighboring Malaysia. After last week's announcement, trade sources feared that if suddenly monthly supplies of around 300,000 to 325,000 tons of palm oil stop, it will cause a sharp rise in edible oil prices in India from May. It may be noted that the edible oil price has been already on the boil due to ongoing Russia-Ukraine crisis. Meanwhile, news agency Reuters reported that Malaysian benchmark crude palm futures fell 2.09% following the news that the ban only covers RBD palmolein. It had jumped nearly 7% to their highest in 6 weeks. The massive short covering fizzled out after hearing the news that the ban only encompasses palmolein, both bulk and packed, from Indonesia. However, there are still concerns that crude palm oil would also be added to the list of banned products, as it is raw material for RBD palm oil. According to reports, Indonesia exported an average of roughly 620,000 tons per month of RBD palm oil in 2021, compared with an average of around 100,000 tons of crude palm oil. Top destinations included India and Pakistan and Spain. The government's move to control stubbornly high cooking oil prices caused a slump in shares of its biggest palm oil companies on Monday, while the rupiah-headed currency fell in Asia. Dollar-denominated bonds issued by Indonesia's government fell more than 1% to their lowest since the spring 2020 COVID market rout. According to data from Indonesia's Palm Oil Association, GAPKI, exports of processed crude palm oil in 2021 stood at 25.7 million tons, or 75% of the total exports of palm products. CPO exports were 2.74 million tons in 2021, or 7.98% of the shipments. In January and February this year, processed crude palm oil exports were 3.38 million tons, or 79% of the exports, while crude palm oil exports were 90,000 tons, that is 2% of the total shipped. Global prices of crude palm oil, which Indonesia uses for cooking oil, have surged to historic highs this year amid rising demand and weak output from top producers, Indonesia and Malaysia. The move by Indonesia to restrict palm oil exports in January, that was lifted in March, also had led to the surge in global prices of crude palm oil.